Hello, guys, and welcome back to the Crypto Syndicate YouTube channel. My name is Amek, and today I'm going to be talking about Binance Futures. In today's video, you are going to learn what exactly is Binance Futures, how to trade on the Binance Futures platform, some strategies that I use in trading on the Binance Futures platform, as well as some tips and some tricks to avoid getting liquidated on Binance Futures, right? So before I get into this video, I would like to briefly state that Binance Futures, just like every other trading platform, has some risk attached to it. Therefore, it's very, very necessary for you to do your due diligence, research, and have adequate knowledge before trading and interacting with the platform, right? So without wasting much of your time, let's get right into this video. So what exactly is Binance Futures? So Binance Futures is a platform that enables traders to leverage on their money and open long and short positions to take advantage of market volatility, right? So that being said, in layman terms, I want to say this in the simplest terms so that you guys can understand what I'm saying right here. So Binance Futures is a platform that allows you to leverage on your money. What that means is Binance Futures is a platform that allows you to trade on borrowed money. So it means if you have just $100 right now, you'll be able to trade with up to $1,000 by using the Binance Futures platform. That's basically what leverage means, right? So when we talk about opening long and short term and short positions, this means you are taking advantage of the market to decide whether you think the market is either going to go up or going to go down. So when you open a long position, what you are basically doing is you are basically predicting that the market would go up. And when you open a short position, it means you are thinking or predicting the market is going to go down. So an example of this is when, for example, BTC is at $36,000 right now, around that price, right? So if you are opening a long position at $36,000, what you are essentially doing is you are predicting that BTC is going to go up from 36,000 to maybe 40,000 or 45,000 or $50,000, right? And if you open a short position, what you are essentially doing is saying you expect BTC to come down in price, right? So from 36,000, you are predicting that BTC could probably go down to 30,000 or $25,000, right? So the difference of futures markets with the spot market, because that's also a market in the crypto space, right? So the major difference here is that when you trade in the spot market, you are essentially buying an asset, but when you trade in the futures market, you are getting into a position, right? You are taking a position. You are actually not buying that asset. You are only involved in the price aspect, right? You are not owning the assets, you are only taking a position as regards to price, right? So I'm going to be going further to explain this by doing practicals and showing you how the Binance Futures interface does work. I'm going to be showing you guys some things as regards Binance Futures, right? So I just shared my screen right now. Let's maximize this a bit. Okay, and I'm going to open the Binance app right now on Windows PC, right? So I'm using the app on Windows PC. You can also use the web version, right? So this is the web version right here. You can visit that on your browser and you can set the language to any language you want. I use English because I speak English basically, right? So, and you can also use it on any other interface you want. You can use it on mobile as well. You can use it on iOS and whatever device you are using. So, but I'm not using the web version. I'm using the app version of Binance on my Windows, and it's because I really do love the platform. So, just some easy navigation. You can see right here. You can come to futures. Right here, you can check your wallet and you can select which wallet you want to select. Like this is fiat and spot wallet, margin, futures, P2P, and savings, right? So we are using futures for this tutorial because we want to talk about futures basically. Right. So Um, the instrument I'm trading right now, right, is BTC USDT perpetual contract, right? So this is the mark price. Mark price is the current price of a certain asset, right? So the current price is 36,243 45. It keeps on fluctuating, right? So the last time I checked this, it was 36,000. So if I had opened a long position at 36,000 and the price is at 36,250 or thereabout now, I'll be making some profit. And in the same vein, if I had opened a position at 36,000 and the price went against my action, which is opening a long position, I'm going to make some loss, right? So in addition to that, 1 second, guys. So you can also view charts here. You can decide to use a lot of trading tools to decide, basically whether you should buy or sell. You would need you would need some knowledge of technical analysis to do that, right? So you can view charts. This is the 1 hour chart time frame. This is the 4 hour time frame, 1 day time frame, and so on and so forth, right? So let's use the 1 day time frame. So this is also the order book. These are the sell orders and these are the buy orders. Those that are buying long and selling short, basically. Right. So there are a lot of tools here. You can use almost any trading tool um on this Binance trading interface, right? So some things I would like to point out is this the mode, right? So it's very, very important to know the mode you are using to trade on Binance Futures. So we have the cross margin mode and we have the isolated margin mode. So basically, the difference between these two modes are that when you open a cross margin position, right? So and you open, let's say, 5 positions while using the cross margin mode, all those positions are going to depend on your margin balance. All of them are going to depend on just a singular margin balance. But when you open an isolated position, then that position is going to is going to depend on a separate margin balance, right? So each position is going to depend on a separate margin balance. So that's the main difference between cross and isolated margin mode. So, but I like using the cross margin mode, so I'm just going to leave it at that, right? So in the same vein, when you want to buy long or sell short, this is the when you want to set a limit order. That means you are going to be the one to set the price where you want to buy long or sell short, or you can easily use a market order. So Binance is automatically going to use a market order for you, right? So the best market order is going to be used to buy long or sell short for you. So this is quite easier, but you can also use the limit, like I said, right? So this is also the leverage, which is very, very important in futures, because basically what leverage means is how much of your capital are you willing to, or how much of borrowed money are you willing to use to trade. So for example, since the leverage is at 3x right now, that means I can trade with 3 times of my capital. So my capital right now is $100 and I can trade with $300 with 3x leverage. If I increase that to let's say 10%, I'm trading with 10 times of my capital, right? So I would advise that if you are new to futures trading, try to limit your leverage to 1 to 5%, because the higher your leverage, the higher your risk, right? So that's one very important thing to note when it comes to Binance Futures and futures platforms in general. So if you are new to futures and you really haven't gotten the hang of the platform, do ensure that you limit your leverage until you understand the platform properly, right? As you can see, the market is very, very volatile, right? So that's it with crypto markets and futures particularly. It's very volatile. So you really have to know what you are doing before you trade in the futures market, right? So I want to talk about something right now. It's my best feature on the Binance Futures platform, and this feature helps a lot, right? So it's something I want to teach you guys how to use, and it actually does help a lot in deciding how exactly you can go into trades, and you can use this to know the outcome of your trades. So it does help you in the sense that you avoid liquidation and you avoid making the wrong decisions. It just gives you an insight before you get into a certain trade, right? So if you want to buy long, this is where you buy long, or you sell short. That's basically what this means, right? So um basically, I'm going to go to calculator, which is the feature I'm telling you guys about. So we hit the calculator right now, and you can use this to check a lot of things: PNL, target price, liquidation price, max open, open price. What PNL means is profit and loss, right? So when you enter into a trade, you are going to have unrealized PNL, which means unrealized profit or loss, right? So, but we'll get back to that later when we get into when we perform a trade, right? So, right now, entry price, you can use this to calculate how your trade is going to work, how your trade is going to pin out. So for example, let's say I enter a trade, I buy long at 36,000 BTC, right? And I want to exit at 40,000 BTC, right? So, and let's say the quantity I'm using is 0.001 BTC, right? So let's calculate that, and this is going to give us an estimation. So if I'm supposed to take this action, right, if I'm entering at 30,000, exiting at 40,000, and using 0.001 BTC, I'm going to be using an initial margin. This means how much of my capital I'm going to have to use to enter a certain trade, right? So I'm going to be using $1.8 to enter into this trade out of my total margin. It means the profit or loss I'm going to make is $4, and the return on investment is 222%. This profit or loss of $4, what it means basically is, I'm entering this trade and BTC is 36,000, and I'm exiting at 40,000. That's a $4,000 difference, right? So in the same vein, if I was to enter this trade at 36,000 and BTC goes down to 20 $32,000, that's a minus $4,000 decrease in the price action. I'm going to be making a loss of $4 as well, right? So the same thing for if I am going to be shorting, right? So let's calculate that. You can see I'm going to be losing $4. That's why I said profit or loss. So, and the return on investment is also 22 minus 222%, right? So if, let's say for example, if the tables are turned, and let's say this is $40,000, right? And for the exit price, let's use 36,000, right? So calculate. You can see that I'm going to be making a profit of $4 if I am shorting, right? So, but if I am shorting at 40,000 and it goes down to 36,000, I'm going to be making profit. But if I short at 40,000 and the price goes to 45,000, for example, I am going to be making loss. So basically, this is how it works. Oh, I'm using a 20x leverage. That's supposed to be 10x leverage. We are using 10x leverage for this tutorial because I'm assuming whoever is watching this tutorial is quite new to futures. So let's go back to long. Let's go back to 36,000 because I'm going to be entering a trade right now in this video, right? So let's go to 36,000, and let's say we want to exit at 40,000, right? So let's use 40,000. Okay, and the position is, let's calculate that. So I'm going to be using an initial margin of $3.6 to get $4, and the return on investment is 111 percent, right? So one other thing I would like to show you guys is how to avoid liquidation, like I mentioned when I started this video, and the answer is by using this calculator to manage your risk and know what exactly you are doing. It also gives you an insight of how your trade is going to look at before getting into a trade. Now, I would like to also say that when you are calculating your liquidation price, be very, very careful, because if your liquidation price is close to the mark price of a certain instrument, for example, if your liquidation price is $32,000 for, and you are entering a trade when BTC is at 36,000, be careful, because if the price of BTC was to drop drastically, for example, and you enter the long position, your liquidation price could possibly change, and you can get liquidated. And when I mean your liquidation price can change, it means it could go up. So it could go up from 32,000 to probably 33 or 34,000, and you will get liquidated. So it's very important to ensure that your liquidation price is always as far from the mark price as possible. The mark price is the current price of a certain instrument at a certain period of time, right? So just ensure that your liquidation price is as far from the mark price as possible, right? So right here we are using 10x leverage again. So let's use I want to move this to 10. Okay, 10 times leverage. The entry price, as we discussed earlier, was 36,000, right? And we are going to be using 0.001 BTC as the quantity, right? So when you calculate that, you can see that the liquidation price is basically zero, which is which is why I'm saying that this is how you avoid liquidation, right? So it's about not being too greedy and following the basic rules of managing your risk adequately. But I'm going to show you guys something very, very quickly right now. So let's assume you want to enter into a trade and you're using zero point 0.1 BTC. I don't even think that will be possible. Yeah, it won't be possible, because my quantity is way more than I can borrow. So, but let's say I want to use 0.01 BTC, that should go through, right? So, as you can see here, it's still the same 10 times leverage. I am longing, I'm opening a long position, and this is my entry price 36,000, but my quantity is quite high, which means I will have to borrow much more money to enter into this trade, right? So um that's why my liquidation price is higher. My liquidation price when I use 0.001 BTC is basically zero, right? And when I use 0.01 BTC, when I borrow much more money to enter into a trade, my liquidation price goes up. Now, in addition to this, there's also one thing I would like to point out to you guys. So another thing that does affect your liquidation price is your balance, right? So this also affects your liquidation price. For example, if you were to have, let's say, for example, $1,000 as your balance, right? You are using the same 0.01 BTC. You are entering a long position at 36,000 BTC. If you have to calculate that, you can see that your liquidation price is back to zero. But if you are to have $100 as your balance, you can see your liquidation price is back to $26,000, right? So in the same vein, let's assume you have $200 as your balance. So let's calculate that. You can see that your liquidation price has reduced quite a bit. So sometimes when you enter a trade and let's say your liquidation price is 16,000 right now, and the trade is going against you, but you want to remain in that position, a smart thing to do is increase your balance. So if my liquidation price is basically $16,000 for BTC and my balance was $200, I can easily increase my balance to $300. And when I calculate that, you can see that my liquidation price has reduced, which means I have more time to remain in that position for the price of that instrument to basically go up. The same thing is the same thing is applied to if I am shorting the market, right? If I want to open a short position. So this is how to use the calculator, and it's very, very important, right? So this is also really a really cool feature, right, to use, because let's go to 10x leverage, or let me just use 9x leverage. So basically, if you are entering BTC at, let's say, if I want to enter a long position at 36,000, right? So and I want to check how I want to check what price BTC has to get to before I can make a certain return on my investment. So let's say I'm looking at a return on investment of 1000%, right? So I can simply calculate that, and you can see that if BTC gets to $76,000, I'll be making 1000% on my trade, right? So this helps you decide, you know, it helps you kind of visualize where exactly you want the price of an instrument to go to, right? To make some certain returns, right? So if I want to make 100%, let's calculate that. I would need BTC to go to $40,000. If I want to make 50%, let's calculate that. So BTC will need to get to 38,000. So this really helps you to calculate the what is it called, the profits you would make, and like what price the instrument has to get to for you to make that profit. Now it also the leverage is also very important here. Let's say I'm using 100 times leverage, for example, and I calculate that. You can see that the target price is much lower, but like I said, the higher your leverage, the higher your risk, right? So the price which BTC has to get to for me to make 50% ROI is much lower. It's just $180 that BTC has to go up. But in the same vein, because I'm using 100 times leverage, I'm going to be facing much more risk, which I don't advise for anyone just getting into futures. Trade responsibly, guys. So it's just like when you are basically told to drink responsibly, right? So let's set that back to a 10x leverage, and you can see this is where BTC needs to get to make a 50% return on your investment, right? So that's that about that. You can use this chart to determine and evaluate the price action in the past to determine if you are supposed to buy or sell, buy long or sell short, right? So let's enter a trade. After using the calculator, I have an insight that if I enter a position using zero, okay, let's go back to the calculator and let me make this simple for you guys. So this is let's say I'm entering this position at 36,200, and my exit price is supposed to be 37,000. I'm predicting that BTC would go to 37,000, and my quantity is 0.005. So let's calculate and see how that's going to check out. Okay, that's an initial margin of $9 and 44% ROI. I'm going to be getting $4 as profits, or I'm going to be losing $4 in loss for this trade. So let's calculate and see my liquidation price. Let's go back to okay, sorry, calculate. Okay, so this is using 11x leverage. So let's calculate the liquidation price as well. So entry price is 36,200. The quantity is 0.005 BTC, and let's calculate that. So you can see my liquidation price is 16,180. This is not something. Oh, I forget. I always forget to change the leverage, because leverage is also very important, right? So, but the liquidation price is $16,180 per BTC, right? So this is not something that a beginner should do, right? So ensure that you really understand futures before you do something like this. Or for beginner's sake, I'm going to do this. Let's use something that doesn't have a liquidation price, right? So if I use 0.002 BTC, I'm not going to be facing any liquidation anytime soon, right? So I want to make this tutorial very easy for you guys. I don't want to expose anyone to risk. If you are making any risk, you should make it independently, right? So this is a good trade to enter. um 36,200 using 0.002 BTC and $100 balance, right? So, but as you can see, the crypto market is very volatile. Just right now, BTC is down to 35,000, basically almost 36,000. So I'm going to be entering into this trade, not 36,200 in this case. I'm going to be using 36,000, exactly 36,000. And I'm going to be using, my size is going to be 0.002 BTC, right? So we calculated that to not have any liquidation price, or let me just use a market price because I don't want to waste you guys time. Time is of the essence in this video, right? So let's use 0.002 BTC. The leverage is 10x and we are using cross margin mode, right? So what else do we have to set? That's all, right? So let's buy long, right? So I click on buy long and that's it. You see order submitted and all that. Now to look at which your position and all that, you just have to basically scroll down. When you scroll down, you can see your position right here. These are where your positions are, right? So if you open an order and it hasn't gotten filled yet, it's going to be in open orders. This is your order history where you can see all your orders, your trade history, your transaction history, your assets and all that, right? So this is the BTC USD perpetual contract using 10 times leverage. My size is my position size is 0.002 BTC and I entered at 35,970. Like I mentioned earlier, the market is going, if you use markets order right here, is going to help you select the best price to get into BTC, right? So basically my liquidation price is zero right now, so I'm not scared or anything, or I shouldn't be scared or anything, right? So my entry price is 35,970, no liquidation price because I manage my risk very carefully. I also forgot to mention, the more trades you enter, the more your risk as well, depending on your margin balance as well, right? So the margin ratio is 0.29%. The margin, this is the margin. This margin ratio means how many percent of my capital I used to enter the trade. Like that's like 10 times of my capital is $1,000. Then I enter the trade with, you do the math, right? So the profit and loss and return on investment, you can see BTC is actually taking a beating right now. I'm in a loss of $0.1 for this trade, right? So, and if I want to close my position, I can either close at the market price or the limit price. You can input your limit price here, right? So, but I'm not going to input the limit price. You can easily close at the market price. So we are back in profit, but still, I'm going to leave that position open anyway, right? So yeah, basically this limit price here, you can set it to, let's say, because you might be asleep when BTC goes to $40,000. So let's say you can put it at $40,000, right? So if you put it at $40,000, and you can also set how much of your position size you want it to sell at, let's say 40,000 BTC. You can decide to put 0.001 BTC, right? Or you can select how many percentage you want it to sell for you at 40,000 BTC or any price you want to set, right? So, but basically, let's leave it at 0.002 BTC, right? So I can set it at 40,000, and if I click on limit, it's going to sell. My order has been submitted. It's going to get out of this trade only when BTC gets to $40,000, right? So that's if BTC gets to $40,000, right? So I'm going to cancel that because I don't want to exit. Sorry. So I go to open orders. Okay, I'm just going to leave it. I'm going to leave it. So let's leave it at positions. Let's go back to our positions. right? So basically, that is how to enter trades when it comes to futures. I also forgot to mention that you can trade different instruments in the futures market. So this is Theta USDT, Big USDT. There are a lot of instruments that you can trade in the futures market, and it's really not limited to BTC or Ethereum. As you can see, EOS, you can trade EOS, you can trade ETC, you can trade a whole lot of instruments in the Binance Futures market. But I like to stick to BTC and Ethereum and EOS, the major coins. I like to stick to the major coins basically, as far as futures market is concerned, right? So what else do I need to cover as regards futures? The calculator is my main price, right? I really love using the calculator because it really gives me an insight of what I am to expect when I do enter a trade. So basically, we are going to leave that trade, and I think if you guys have any questions, you can leave that for me in the comment section below. I'm going to attend to whatever questions you have. Okay, thanks for watching this video on how to use the the Binance Futures platform. I really do hope that this video is going to help you understand the how to use the Binance Futures platform, as well as utilize the strategies and the tips that I dropped in this video to trade on the Binance Futures platform. Thanks for watching this video. I'm going to catch you guys in the next video. Kindly don't forget to like this video, share this video, and subscribe to this channel to support future content that I'm going to be posting on the Crypto Syndicates YouTube channel. Peace out, guys.